Will gold hit 1 lakh rupees per 10 grams in India? So in the past year alone, gold has gained over 20%, and today 10 grams of gold costs about 74,500 rupees. Gold has been though shining for quite some time now, not just the last year. In fact, here's something that will absolutely blow your mind. If you had invested 1 lakh in gold 5 years ago in 2019, it would have today grown to 2.27 lakhs. That's an annual return of about 17.85%. And people still think gold is not a good investment. And they always compare it to the returns of the stock market. So now let's actually compare the two. If you had invested the same 1 lakh in the Indian stock market, let's say the Nifty 50 in 2019, that would have grown to 2.07 lakhs today, an annual return of 15.67%. So gold has actually beaten the Indian stock market in the last 5 years. Now that doesn't always hold true across different time frames, but it does tell you that investing in gold can actually be a good idea. And at the end of this video, I'm going to share something even more mind-boggling with you about investing in gold, along with a very easy way by which you can pay zero tax on your gold investments. But first, it's super important to understand why gold has been performing so well, as that will give you a perspective of what could happen next. Because I do believe very strongly that gold investing has fundamentally changed forever. Hello everyone and welcome back to my channel. My name is Udayan Adhye and I have been licensed in the financial services space in India since 2015. And so far, I have helped over 1,000 families make better financial decisions. Now, if you think about it, gold is believed to traditionally perform well when the economy is not doing well or stocks are going down. Like in the 1970s, when gold rose because the US interest rate was increased to 20%. And it was also a period when both the inflation was high and there was uneven economic growth. Or in 2008 during the global financial crisis. But today, the world economy seems to be in a much better place after the COVID-19 shock. Why is it then that gold is roaring? First up, central banks across the world have been buying huge amounts of gold in the past 2 years. India's central bank, the Reserve Bank of India, has also bought over 200 tons of gold since 2019. And this buying is gathering momentum. In the first 4 months of 2024 alone, the RBI has bought more gold than it did in all of 2023. Amongst all central banks, China's central bank, which is the People's Bank of China, has purchased the most amount of gold. In fact, it has been a net buyer of gold for 18 continuous months now and has dramatically increased its gold reserves. Now, if you notice, this buying of gold has really went up after Russia invaded Ukraine. And it has gathered even more momentum from 26th of February 2022 onwards, when the US and its allies imposed sanctions on Russia. As a part of these sanctions on Russia, $300 billion worth of Russian reserves that were in US dollars have been frozen. And now the same $300 billion could be given as aid to Ukraine. Now that is worrying for many countries. These sanctions were a big wake-up call for the kind of control that the US and the West has on global finances. So various central banks now want to move away from their dependence on the United States and specifically the US dollar. This phenomena is called de-dollarization, and that's fundamentally changing how gold investing works. Now, de-dollarization means reducing a country's reliance on the US dollar, which today has the status of being the reserve currency of the world. This shift often includes a central bank diversifying into other currencies and assets like gold to protect against the economic instability and geopolitical risks. Adding gold to a country's reserves has huge benefits, because it's important to remember that no one country controls gold, and physical gold has actual store value. So I'll share an example to explain how this works. If, let's say, tomorrow sanctions are imposed on India, no country can put a lock on India's central bank's gold vault. And in fact, right now, India is bringing back its gold reserves that it has kept in foreign countries back into India. so that becomes even more fortified. In fact, tell me in the comments if you know the Indian city that has the largest chunk of India's gold reserves. Now, apart from the Russia-Ukraine war, even the Israel-Palestine conflict has added further uncertainty to the global markets. And that has also played a role in the price of gold going up. And because central banks have massive amount of money, a lot of people believe that a new base for gold has been created. Now, apart from central banks, even retail investors like you and me have been buying a lot more gold. Once again, China leads the charge here. In the last few years, the Chinese real estate market has absolutely collapsed. Even its stock market is not doing well. To give you an idea, the Shanghai Composite has delivered negative returns since 2018. So Chinese retail investors want better opportunities, better places where they can invest their hard-earned money, and they have been buying gold as well. Then coming to Indian households, here's a fun fact. Indian households are estimated to hold more than 21,000 tons of gold, which is, by the way, more gold than the top 5 central bank gold reserves combined. Now the big question, when will gold hit 1 lakh rupees per 10 grams? Let's use my master financial calculator here to see. And by the way, you can even download it for free using the link down below in the description. Now let's first find out the exact current price of gold. It is 74,350 rupees. So we'll enter that 74,350. Now gold's 1 year return has been 20.4%. So we will enter that here and see if it grows at that same return and that same rate, then how soon it will get to 1 lakh. So now let's put in 1 year. At that rate, it reaches 89,500. Let's put in 1.5 years. Very close to 1 lakh. So then we'll enter 1.6, which is a little over 18 months. And as you can tell, it hits 1 lakh rupees. Now the crucial factor here is that it grows at 20.4%. Let's also try out one more historical return to see when gold could potentially reach 1 lakh. Gold's 5-year annual return has been 17.85%. So if we reduce this to 17.85%, then we are potentially going to get there in about 1 year, 8-9 months to 2 years. Once again, it's super important to know that these returns are excessively high. Gold has had a wonderful run, and let's temper our expectations. Let's reduce the return and see when gold could potentially reach 1 lakh with, say, a 12% return. And in that case, it reaches 1 lakh in the 3rd year. So there you have it. If you look at global institutions that issue research reports, Citibank believes that gold will hit $3,000 by the end of 2024, which means a 28% jump from the current levels, which means that by the end of 2024, gold in rupee terms will be about 95,000 rupees. Now, if you look at JP Morgan's 2024 year-end target, it is about $2,500. That translates to about 79,500 Indian rupees. Having said all of that, how should you approach gold investing right now? So investing about 5 to 20% of your total money in gold to diversify your investments could be a great idea. And this is where I'm going to share something mind-boggling as promised with you. Gold has outperformed the Nifty 50 in 5 years. We have already seen that. Now let's look at a longer time frame. So as you can see, over the last 5 years, gold, which is in blue, has given 114% absolute returns, while the Nifty 50 has given about 88% absolute returns. Let's really zoom out and look at the performance of both these asset classes since the year 2000. So ever since the millennium turned, we look at the exact returns and see if that throws any surprises. If you have any guesses, it's time to make them right now. So there you go. Once again, gold has actually returned once again higher than the Indian stock market. This is the Nifty 50, so large cap stocks only. But gold has returned 1,488%. So 1,488%, while the Nifty 50 has returned about 1,296%, which means gold has grown more than 15.5 times, whereas the Nifty 50 has grown by about 14 times. Now, if you want to invest in gold, what is the best way you should go about it? If you're only looking to invest in gold as an investment, then It's not gold jewelry, it's not gold coins, and it's not even gold mutual funds. The best way to invest in gold as an investment is by buying sovereign gold bonds. That's because they don't have any making charges, absolutely no headaches of gold purity. They also offer a 2.5% annual interest over and above gold price returns. And the best part, they have absolutely no capital gains tax if you hold the bond till its maturity. Should I make a detailed video comparing the different ways you can buy gold and their pros and cons? Tell me down below in the comments, and I'll catch you in the next one.